So hi traders and welcome to our price action training school. My name is Nenad and today we will have questions and answers for lessons 16 to 20. I am very happy that you're enjoying our price action training school. There was a lot of comments really concerning how we actually how we approach to price action, and all of these comments have been very positive. So I'm really glad that I'm helping you with this, and of course price action is just another step towards your successful forex trading career. Let me tell you that a lot of people who simply don't know what the price action is, simply said, you can always see the real power in price action trading, and you can apply price action no matter whether you trade harmonics, whether you trade indicator-based systems, or simply if you trade some simple yet effective systems who don't use any of the indicators. Price action is price action, and it will always be the real and the true avatar of price action. So let me tell you that I have received a lot of questions, and there was a lot of similar questions. So today we will actually focus on most important questions, and if you have anything to add or you have anything to ask, just tell me and ask me during this webinar, and I will be sure to answer. Online education materials are available by Admiral Markets Estonia for a global audience, so take into consideration that information is not suitable for everyone. To get a corresponding information on charting conditions and any other detail, you should visit admiralmarketsglobal.com, select your country, and contact an appropriate entity. Risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. And final part, explain that Admiral Markets UK Ltd takes no responsibility for information accuracy. This is solely my opinion, and Forex is risky business, so this webinar is for informational and educational purposes only. By logging into Traders Room, you will be able to download Admiral Markets Supreme Edition, and don't forget that you can also enjoy the benefits of WebTrader at this address. Admiral Markets has been the officially best MT4 broker voted in UK. So today's agenda, questions and answers, and live questions and answers. So guys, now I will go through the questions, and of course if you need anything else to ask me or add, feel free to ask me. Don't hesitate, because I'm here for you, and I hope that you will actually one day that you will be fully fledged traders. Okay. So let's start then. The first question was actually about breakouts, and the question was, can we trade breakouts always with trigger happy trades? This question was actually I received 5, 6 of these similar questions. Can we trade breakouts with trigger happy trades? And the answer is basically, guys, if you see that there is a huge momentum in the market. For example, yesterday I posted the dollar CAD analysis on Admiral Markets website, and that analysis was definitely, again, as always, 90% of the analysis that I do is very accurate. So the thing is that, yeah, if you see that there is impending breakout, and that can be actually a strong breakout, so you can actually use it to enter a trigger happy trade. So here, as you can see, dollar CAD trade from yesterday, I said if it goes above this level, it should proceed up, and yeah, it went actually up, and it was very clear that we expected the momentum above H4. Also here, guys, as you can see, if you in your trading career, in your trading days, if you experience the breakout of the strong trend line, such as this one, like this, you just need to use the rules that we use for trigger happy trades. If you're not sure about the rules that we use for trigger happy trades, please go to my webinar in Price Action Trading School, where I explained breakouts clearly, and go through the material again. So you will know what to do. But if you spot a huge momentum and a nice momentum in the desired direction, yes, then you can go with trigger happy trades. But those trades, as you could have seen, they're not always the same. Sometimes those trades can yield a huge number of pips. Sometimes those trades can generate some less number. Sometimes you will be stopped out. But the important thing is that always try to spot good momentum. Okay, you need momentum for breakout trades, and go with rules. How I explain the rules. Don't stray away and don't make up your own rules. The next question, why first 3 hours? Probably the original poster or the OP referred to the first 3 hours of each major session. The thing is, why first 3 hours? Because the first 3 hours of each session are most profitable, guys. Okay, that means I'm always referring to major sessions, and major sessions are London, New York, and Tokyo session. So the first 3 hours of each session are most profitable, guys. Okay, that is why we need to use the first 3 hours of each session. A question, where can I get the materials for lessons? Here at this web address, just go here, and here you will see Admiral Markets YouTube channel dedicated to price action trading school, and just go through the lesson 1, go through all lessons, because we will proceed with these lessons during summer period, and actually we will have those in September. And then as time progresses, as you learn price action, we will make possibly live trading webinars where we could actually use the knowledge from price action. But we need to go step by step. There is still a lot to talk about, especially when it comes to risk and so on. So the first thing is, why first 3 hours? Why major sessions? Because, guys, that is when price tends to move the best. Okay, you will see much better movement during London, New York, and Tokyo session. Then you will see it during Wellington session, or during let's say Frankfurt session. Frankfurt fake or Frankie fake, how we traders call it. It's not very suitable for trend traders, because price tends to reverse, and then during London session it tends to reverse again. So the best movements can be found during major sessions such as London, New York, and Tokyo. So those are 3 major sessions. All other sessions are not so important. Now the question, can we estimate the breakout? Of course, guys, again, refer to price action trading school. You can estimate the breakout, but the problem is you need actually to know where the breakout, which direction breakout should happen. So let's say that you want to use a breakout of, let's see, okay, here we see some form of bearish pennant here. This is the flagpole, this is the pennant. So the direction of the breakout usually is estimated by the length of the pole. So if you see, this is standard price action teaching. So if you see that this is actually the pole, okay, this from this. So this is like 137 pips. You just need to add those 137 pips to the breakout point. Actually, you see, this was just the almost it's slightly less than a half of a breakout, but that is how you can estimate the maximum breakout of the pattern. Okay, okay, you can see it here. You can see it here. So yeah, guys, I'm seeing your questions. So please wait. I will go through questions that you've been asking me through emails, and when I finish this, I will go through live questions. So at this point, stay tuned. So here is how you estimate breakouts. Okay, so if this is the pole, the length of the pole, you just need to add it, and that is the maximum breakout spot. But very often you will see that the price will not respect the whole projection. Now, why I say does not respect? Because during intraday trading, there are some important things that shape up the price action flow. It's not just about where we think the price will go, judging from our analysis. As you know, I never use simple indicator for, single indicator for estimating the power of breakout or potential targets. I use host of simple indicators, and you can see that my entries and targets are always pretty much accurate. That is because I have come to know the fact that actually price action trading needs to use confluence. You cannot just say standard teaching of price action will tell you estimate the length of the flagpole, add it to the breakout point, and you will see target. But the target is not just estimated breakout point, how standard price action analysis teaches us. It's simple. It's not that simple. You need to know a lot more facts, because intraday price action is also shaped out by intermarket correlations, such as equities market. Now, if you witnessed last night movement of pound yen, guys, this is not just an exception. And now standard price action would probably tell you, okay, if we see a breakout, can we estimate where it will go? Now, first of all, we don't see a bullish pattern here, okay, because the only thing which we see here is actually this small, let's say, these are small bullish patterns, okay, here. If we call it a bullish pattern, this is actually a quadruple bottom. And it's okay, this can be estimated as a bullish pattern. Because here, guys, you add another part of the confluence that is a trend line. And we can say actually this is a form of a bullish pattern. But if you have if you put this trend line here, then you will actually, this will qualify for a bearish pennant, okay? But if you remove this trend line, this is actually bullish, right? So there is no actual projection. And by using our price analysis tools such as that we covered, such as Bollinger Bands, pivot points, ATR levels, we can actually see that the breakout, estimated breakout here was already overshot by a huge number of pips. It's because pound yen is strongly correlated to Nikkei index. And I always state, if you trend yen crosses, pay attention to indices, pay attention to equities. Here we have SP 500 that is also bullish, so yen pairs tend to follow SP 500 during New York session, Nikkei index during Tokyo session, and DAX during London session. Now you can see it goes up, and pound yen is also going up. If you put Nikkei here, you can also see that it went up. So it will have the influence on Forex pairs. If you use our great tool, correlation matrix, you will also see that the correlation between intermarket, between strong equities, and I will add Japanese here, and you will see, guys, here Japanese 225, okay, this one I will do it like this. We don't need this one. Then I will add DAX. Okay, I will also add AUD yen, dollar yen, and pound yen, and you will see what I'm talking about, okay, in a minute here. And we have SP 500 here, okay, add, and okay, here SP 500, and finally the dragon, or the beast, how some traders call it. I call it the dragon. And here we will put intraday correlation. Intraday correlation is 1 hour, 200 bars. And here, guys, you can see the perfect correlation between equities and between yen pairs. Most of those you can see is very, very positive. So it means that the pairs are moving in the same direction. Okay, so pay attention to yen pairs during 3 major sessions. So it's not that simple as standard price analysis. is telling us just go with the naked trading, just put the lines here and then you will actually see the breakout. It doesn't go like that. You need to use confluence, guys. Confluence is where you stack odds to your favor. Not a single trend line, but a confluence of price action factors that we've been going through in price action training school. So here, guys, you can see huge correlation between equities, Nikkei, DAX, and SP 500 and dollar yen pairs, especially ODN, my favorite, and the Dragon. You can see it here. Huge correlation, okay? Huge correlation, guys. Now, if you add a daily, let's say on 200 bars, it's last 200 bars of daily price action, you can see also a good correlation, especially here, pound yen, Japanese index here, and you can see that the correlation is indeed high. Some traders eventually can use more to the moment charts like this, and you can see that even on last 100 bars, price action has been in a huge favor of a total correlation between equities and yes. The correlation number, if the correlation number is higher, it means that the pairs are moving in the same direction. It does not necessarily mean that they will move faster. The thing is that usually equities are moving faster, but yen pairs such as the Dragon and ODN can also move very fast. So this is not a representation of how fast the pairs will move. For that, you need to use ATR indicator when you will see the range, the possible range, and that range will usually tell you are the pairs slow or fast. But here actually you will see the correlation that indicates if the pairs are moving in the same or the opposite direction. This is strong correlation. Red, see, everything above 60 is strong. Above, see, 80 is very strong, and it means that pairs are moving in the same direction. So when you're estimating the power of the breakout, you cannot just say we will go with the flagpole breakout, because very often those flagpoles will not be respected, okay? So that is why I use a host of those confluence factors that will make up for a breakout point. So my recommendation is use confluence for targets too, and that is what we are also learning on our price action training school. Okay. Next question is when trading fake outs, do we always use a color change? Yes, guys. The simple question is yes. If you are still not sure what how we trade fake outs, as I say, guys, you can always go to Price Action Training School on Admiral Markets YouTube channel. All webinars are recorded, uploaded, and you can see how I trade fake outs and how I teach you to trade fake outs. So yes, the answer is simply yes. You always use a color change to trade fake outs. Always, guys, okay? Don't stray away from that rule. Now, can we use standard pivot points? Of course, guys, that probably DOP referred to actually targets, okay, when you determine targets for breakouts and fake outs. And the answer is yes, you can use standard pivot points, okay? And the thing is, I personally recommend Camarilla pivot points. I also sent the indicator to all Admiral Markets account holders and MTDs. I hope that you have found the indicator very useful. That is Camarilla indicator, and that is also daily pivot point indicator. So the indicator has both Camarilla and daily pivot point in itself. So yes, the answer is you can use standard pivot points, but I go with Camarilla. You can also use other pivot points such as Fibonacci pivots. It doesn't matter. All those indicators are very good. They're very strong, and don't underestimate the power of those indicators. All of those are very strong. But I prefer, of course, Camarilla because that is my, I can say, almost a proprietary indicator. Is there a difference between POC on 1 hour and 4 hour? Well, guys, if you tend to trade on intraday time frames, then we use mostly 1 hour time frame, because intraday moves will respect now moment price action better than they will respect some intra-week price action. Intra-week price action usually is better found on 4 hour time frame. So using my session recap webinars, you will probably see that I use 4 hour time frame. It is because session recap webinars are giving you intra-week swing trades. So those are trades that you can usually follow for the same day, next day, and they don't last more than 3 days. If you leave the trade going on, it's usually maximum 5 working days, but usually it's like during the working week. It's like up to 3-4 days. On intraday charts, if you've been following my analysis on Admiral Markets and Forex Street, you can see that actually 1 hour is my preferred time frame of choice, and that is simply because 1 hour time frame is much better for now moment price action compared to slow developing price action on those swing charts. But everything has its own advantage. There are a lot of people who want to exploit now moment price action, who want to actually take profits fast, and yeah, that is one of our trademarks, pre-fact and accurate analysis, and most of the analysis is done on 1 hour time frame. But usually POCs, similar POCs will be found between 1 and 4 hour, but 4 hour is a higher time frame, so some points such as pivot points, retracements, trend lines are different than POC on 1 hour. Also, one question that I received, and I didn't write it down here on the slide, is how we enter the market when we see POC. Guys, POC is point of confluence, and it's very clear. It's very clearly shown on the chart. You will usually see my POC in a form of a rectangle that is highlighted by a color. That color usually is yellow, but it can be other, depending on the mood. I use yellow color, it's okay. And if you see that the price is entering POC zone, you don't have anything to do then to press buy or sell, because guys, usually that POC zone will give you an immediate trade to trade in the direction of the trend, or counter trend if it's explicitly explained in the article. But the thing is that POC zone is your zone where you opt out for either a buy or a sell trade, okay? So that is POC zone. So you don't need to wait for any cross, stochastic cross, whatever. You just press buy or sell depending on the possible trade. And you can see that I usually do those immediate trades, as I explained it on session recaps, and I do it also on my Camarilla MACD account. So the answer, use POC zones to see where your possible entry is and to see price rejections. And yes, there are similarities between the POCs, but of course, because this is different time frame, POCs are different too. Which time frame is the best? I think that I already explained my opinion. For scalping, 15 minutes, 5 minutes. For intraday setups, 1 hour. For intra-week setups, 4 hour time frame. Okay? So for scalping, 15 minutes and 5 minute time frame. For intraday, 1 hour. For intra-week setups, swings, 4 hour time frame. Can we trade ATR breakouts independently? That was also a question I got via email. And yes, ATR breakouts that I've been teaching you about, yes, you can trade it independently. So what you can do is actually you can use POCs for positional trades, trend trades. You can use it for counter trend trades, and breakouts are usually done independently. So usually your breakout trades are they are usually made up with a different mindset. You need to be quick with those. You need to profit fast. That is in contrary to counter trend and positional trades where you usually leave the trade going on for, let's say, a day or a week. So yes, breakouts are done independently, okay? So yeah, that is the answer to your question. Now guys, yeah, the last question was end of day trades with ATR breakouts. I don't recommend it. You can try. Actually, I don't do it, so you might try to do it on your demo account, but I personally don't do it simply because well, I tend to make my trades during the day, not during the end of the day. But yes, guys, you can actually try to exploit those breakout trades on demo account, and you can tell me how it goes. But usually stick to our standard, try to stick out to our standard time frames, that is intraday trading and during the day or during major trading sessions. But if you are, let's say, late in a day, you don't have the time, then try to trade ATR breakouts during Tokyo session. Or eventually try to practice out those end of day trades on your demo account first, and then tell me the results. So actually I might adopt the rule that it can be traded during end of day. At this point I don't do it, but as I say, you can do it if you think that you can trade it. Now let's go through live questions, guys, please. Let's go through live questions and I will answer. The first question is, I'm missing things here when I can get the materials for the lessons. I sent you the link. So yes, you can actually see the link here. Okay, so this is it, and again, this is the price action trading school YouTube channel. When you say first 3 hours are profitable, do you mean for both up and down trend? It doesn't matter. The trend is trend. There is no difference between up and down trend, because we traders don't care about uptrend or downtrend. We trade whatever market gives us to trade. We are capturing the market. We are stalkers. We are following the market. And when we see the opportunity, we grab it, okay? So we ambush the price, okay? We ambush the price. We want to ambush the price. We want to jump on it, take it by surprise, and take the most of it, okay? So if you see an uptrend, well, the first 3 hours are suitable to trade the uptrend, most suitable. When you see a downtrend, the first 3 hours are usually more suitable for trade the downtrend, because traders will enter the market usually before London lunch, and during London lunch you will see a form of profit taking. So it's always best to actually exploit the first 3 hours of each major session and the first 5 minutes at the TOTH, that is top of the hour. So next question is, yeah, I already answered. The higher the correlation number, the faster the price will move. No, the higher the correlation number, the bigger the price and the other markets are, the higher the chance that other markets and Forex are go in correlation. That means that they are moving in same direction. So the bigger the number is, the bigger move in the same direction will be. If you see a negative correlation, that means that the movement is opposite. And you will usually see negative correlation between euro, dollar, and dollar Swissy, okay? The next question is, what is ATR breakout? This is, guys, again, I definitely need to show you, wait, give me a second. Okay, what is ATR breakout? That is one of the lessons that we actually had here. The list was already there, and this was the webinar where I actually explained about true and ATR breakouts, a very unique approach, and you can see it here on Price Action Trading School. Okay, here you can see it there, and please use this. This will help you. This is something that is maybe new to you, but this can be effective. And okay, so that is ATR breakout. So that was everything that I received. I don't see any questions at this point. So guys, please, if you have any other question, tell me. I will listen, of course. I will try to answer. If there are no questions, then I assume that everything is clear. So we might actually, yeah, we might say that this is the end of webinar. So let me see. I don't see, yeah. The question, do we have to have real account to email you questions? No, just you don't have to have a real account, but it's much better that you have a real account because you can actually trade with other markets and earn free credits. So just send me an email. I will explain everything. And it's always good to have a real account with other markets because I have also 5 different accounts with other markets, and your money is safe. It's a fully regulated broker. But if you don't have the money, then use demo account, and when you're sure that you can trade profitably, then of course open a real account. So no problem. If you have a demo account, I will still help you. Of course, it doesn't matter, but just send me your questions and I am always glad to help. Okay, so let's see if there are other questions. Don't see it at this point, but well. Next question. When price touches a support resistance level, how do we determine whether it will break level or it will bounce from that level? Well, good question, and the answer is and can be found here. Let me give you price action trading school breakouts, guys. That was explained in price action trading school. So please let me give you the link. Of course, you cannot say that that is 100% sure, but you are actually using your price action knowledge to determine whether it will be a fake out or a real breakout. And here, this is the lesson. It's explained here. And you can actually see it also here. Okay, so this is it. Price action trading school, breakouts, and how to trade it. So here you can learn actually about breakouts and how to trade those breakouts. Okay, so this is, here you will see your questions answered, but of course you cannot say for sure that it will be a fake out or breakout, but here these are the rules for breakouts. And of course you can also use my fake out, so you can actually determine how to trade fake outs. And here you can also use this webinar, and it's called Price Action Trading School, Trading Fake Outs. Here you will see how to trade fake outs. Okay, do we have a next question? Let me see, I don't see any questions. Okay guys, don't be shy. If you have other questions, please of course ask me. Okay, so there are no questions. So I assume I answered most of your questions, because I've been also receiving a lot of similar questions, actually, where traders ask me similar questions. Should we trade 1 hour or 4 hour or 5 minutes? This is what I say, depending on your mindset. Sometimes you will be in the mood to trade 1 hour, sometimes you will go for 4 hours, sometimes you will actually trade 15 minutes, but have in mind that lower time frames are mostly used for scalping purposes. Okay, so that was all, guys. I think we have covered everything. I don't see any questions. So this webinar is recorded. It will be uploaded as always, and if anything is not clear, again, send me questions, and next set of Price Action Trading School will start soon. Be sure to sign up on our website. So thank you for listening. Thank you for being here with me. I wish you a great week and a lot of green pips as always. Follow us on other markets and of course use Twitter because I use Twitter a lot. And you are the first to know when I publish the analysis. It's always the first on other markets website. So thank you guys. I hope that you enjoyed. See you soon. Cheers. Trade safe.